Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. And I think I always joke, sometimes my ability is severely lacking. Now, in today's video, I will actually show you some of the questions that I have decided to bank for the future. So you can see the sort of questions that I am looking for. And I might actually record the answer to one of these questions later today, depending how long this particular video goes for. So let's get stuck into it and not waste any time and have a look at a comment released by or written by David XB1JI, who says, and this is a really good comment. I like this sort of insightful comment about a company called Jumbo Interactive. Now, Jumbo Interactive share price has been in a bit of a funk for quite a while. We'll have a look at the share price and the chart right now. If, by the way, ComSec is down. Yep, ComSec's still down. Down for the next time is currently 10:22. Next 2 hours, which I was a little bit upset about because I was wanting to have a look at ComSec earlier today, but I will have to be a little bit patient. Anyway, so Jumbo Interactive share price has fallen a fair bit. I have heard quite a few experts mention that this is a high quality company, a company they hold or have held for the long term. But the share price has pulled back to an interesting level, which is $9.50. And if it drops to, say, around about $7, that would be the COVID-19 low. But in saying all that, David did mention here that you do have to consider that they do have an agreement with the Lottery Corporation that allows them to sell lottery tickets. Agreement expires in 2030, so 5 years. No guarantee the agreement will be renewed or the terms of renewal. They pay an upfront fee and a percentage of sales to the Lottery Corporation. Something to consider as we get closer to 2030. If agreement is not renewed, you can imagine what will happen to the share price. Also, 4 people gave this a thumbs up. So this is a brilliant, insightful comment. I didn't really know this about Jumbo. It's not the sort of company I have delved into that deeply. And there is a chance that maybe people are thinking about this, although I would think maybe not. I think maybe some people have been thinking about this, like David, but I'd say the majority don't think that far ahead. Now, the reason that this is interesting is because there was a company whose name I forget right now, who had a deal. They ran all the Telstra stores. So they had a deal with Telstra, and Telstra said, well, your margins are quite good, so we're going to run this store ourselves. And this company went bye-bye. I should think they bought something else and then they were taken over. What company was that? I completely forget right now. Anyway, so this is the problem with these sort of companies who have a deal with another company, and all it takes is one bit of a change in the terms of that deal, or the deal could be cancelled and the company will just go bye-bye. We also saw this with BSA. BSA had a deal, a very, very large deal with the NBN, and they lost this deal, and this is what happened to the share price. I think the share price here dropped 84.34% on that day because of the loss of this one deal. So you do have to be aware that some companies have pretty big deals with the one company, and all it takes is for that deal to be terminated, and you can see the share price drop 80 to 90%. So great comment from David. So I'll give that definitely a thumbs up. 5 people now have given that a thumbs up. Sham G33 says, in your opinion, is QCOM undervalued at these levels? Now, this is interesting because I didn't have a look at QCOM, but this is Qualcomm, but I was going to have a look at this company because it popped up on my radar as a possible, I'm going to say cheap company, as a possible company that could be undervalued at these levels. I was going to back this particular question, but then I realized this is more time dependent because at these levels and the level where QCOM is could be considerably different in 3 months' time. So first thing I'm going to do is just have a look at the chart for QCOM. The chart does not look overly good. This company does have something to do with semiconductors or something, chips or something like that. engages in developing and commercializing foundational techniques and products used in mobile devices and other. Well, maybe I'm wrong. For some reason, I've always thought of QCOM as something to do with chip making or semiconductors, something like that. Anyway, so this is a chart, daily chart for Qualcomm. Share price, or maybe I'm thinking of another company. Anyway, this is the chart for Qualcomm. Share price has pulled back from June 2024, so almost 1 year ago. Share price has gone from 230 down to about 160 or so. If you have a look at the weekly chart, in fact, what I'll do is I'll zoom out and we can sort of determine whether this might be a high quality company just by looking at the long-term chart. And we do see periods of time where the share price does nothing and falls below the 200-week moving average for a period of time. We saw that between 2015 and 2019-20. Share price just went sideways and then rallied. So we do see the share price below the 200-week moving average way more often than what you might assume for a higher quality company. So that's one little site you might be able to pull away just by looking at the long-term chart. Now, I have not had a look at anything else when it comes to this particular company. And so what I'll do now is I'll have a look at some of the financials, because the P ratio of Qualcomm is about 16. Anyway, 16. I'm going to see if FinChat says anything else about what this company does. Seems like they are mostly into telecommunications, that sort of thing. Yeah, anyway, so let's just have a look at the overview of this company. It's a fairly big company. Market cap is 175 million, which means if they were on the ASX, this would be one of the biggest companies on our exchange. Revenue growth is over the last 10 years at 4.4% per year. Over the last 3 years, 2.5%. Earnings per share, 8.8% over the last 10 years. 0.2% over the last 3 years. Gross margins 55.7%, operating margins at 27.6%. Probably at a nice level. I won't push back on those margins. Return on equity 72%. I'll focus on the return on invested capital, which is at 31.9%. So it's really interesting that return on invested capital is at 31.9% over the last 5 years, and the company hasn't really seen any translation of that nice sort of return on invested capital to increases in revenue and earnings per share. And sometimes when you see a lack of increase in revenue and earnings, when they do have a nice return on invested capital, that means they do have a fairly high dividend payout. But this company has a dividend payout ratio of only 34.3%. So it's towards what I want to see for any company. And yeah, the P ratio is 16.3. What else can we take away from this? Debt equity is at 0.5, so nothing too extreme there. Now, 16.3 P ratio, I would want to have a look just to see if that's on a low side for this company. So let's have a look at the P ratio history. And you can see the P ratio just dropped like a rock in 2018. It is a problem just by looking or just having a look at the P ratio. And some people do get caught out by this because sometimes a company will have a one-off, either a favorable one-off or a unfavorable one-off. And I still remember many, many years ago, I was actually caught out by this when I looked at the profit of a company 1 year. This would be well over 10 years ago. And the company, it was a fairly small company, had a really nice profit. And I went, oh, this is pretty nice profit. Company's fairly small. And then I bought some shares. And then when I had a look at the financial statements, there was a one-off. It was either, I think it was just a change in value of property or something really simple like that. So it really distorted the profit for that 1 year. So you do have to sometimes understand why a company might have had a high or low profit. And you can definitely see Qualcomm, for some reason in 2018, their profit was negative. Probably a one-off. But historically, the P ratio, if you just ignore that, the P ratio looks like it does. In fact, what I might do is just eliminate that year. There we go. So P ratio of Qualcomm has been as low as 10 back in 2022 and has been as high as probably around 30. So I would say a typical P ratio for this company is between about 12 and above 20, about 22 or so. So that means the P ratio of this company is sort of in the normal range, what you might expect. You might also argue that if it gets towards 10, that would be ideal buying conditions or buying levels. And if it gets above, say, 25, that would be really good levels to maybe take a bit of profit. Okay, another thing I want to look at is just the history of revenue. Let me get rid of the PE ratio. And I want to have a look at the last 5, 10 years. 10 years, there we go. So revenue, yeah, up 5 over the last 10 years, CAGR of 5.56%. They do have a nice little per share. So revenue per share. So this takes into account buybacks and capital raisings, that sort of thing. And revenue per share has been growing at 9.81%. So revenue per share has been growing at a quicker rate than total revenue, which means this company probably has been doing some share buybacks. So revenue per share is actually better than revenue growth. And we can confirm the company's been doing share buybacks if we have a look at shares outstanding. Yeah, shares outstanding have been going down from 1.5 billion down to 1.1 billion. So that's another reason why I do prefer sometimes to have a look at revenue per share, because our total revenue doesn't take into account share buybacks or dilution, capital raisings, that sort of thing. So revenue per share, actually, per share growth has actually been okay at 9.81%. Okay, so the question becomes, would I consider this company undervalued at these levels? Now, with a margin of safety, I'd probably say maybe not. Share price is just above the 200-week moving average. Now, if the share price falls maybe towards $100, I'd say maybe there is some value, and with that margin of safety. So probably I'd say maybe fair value at these levels, but if it falls much further from here, I would say maybe undervalued with a bit of margin of safety. So thank you for that, Sham MG, because I was thinking of actually taking a look at Qualcomm in the future, and now I know they are not. They are not a chip manufacturer or whatever. Maybe I'm thinking of another company. Maybe it's Broadcom. I forget. Anyway, JustJamesDean had 2 little comments about end of financial year bargains. In fact, a previous mention, here it is. So what I'll do is, although this one, he mentioned DXS and CSL, DXS and CSL. So we'll have a look at this one. Actually, we'll have a look at this one in a second or so. But before we have a look at that one, we'll see what Scott says in regards to ServiceStream. So let's have a look. We'll see if ServiceStream posted a dumpling top. Never heard of that before, or similar last week on the daily. There are fair few at that 52-week high point. They're looking at tad dire on the technicals. Aussie Broadband is another one that just can't seem to get enough traction. I actually noticed that. I've been waiting for Aussie Broadband to break out. It just is finding a little bit hard to get a little bit of momentum. So a little bit of selling has been coming in for Aussie Broadband. It is a little bit frustrating because I am holding Aussie Broadband, not ServiceStream. So just triple top rejection is frustrating, especially for a company with so much good prospect. I reckon the S&P, NASDAQ and Dow Jones may all have put in an evening start or similar on Friday. So this is last Friday, not yesterday. So we're talking about Friday, the 13th of June. And can't help but feel some downside is on the cards near term. Don't get complacent, y'all. It could be worth gathering cash while there is still some strength to sell into. I'm going to have a quick look at ServiceStream and Aussie Broadband. So ServiceStream has been in a beautiful uptrend for a while. Let's have a look at the daily chart for this one. If my trading view decides to work, there we go. So this has been in a beautiful uptrend for a while. In fact, if I was trading this, I'd probably not even think about selling out just yet. We have seen some bit of volume coming in as well. Some spikes in volume. Could be some fund managers taking position or maybe selling out or maybe taking profits. So the share price has run up a fair bit. And I was trading this and I got a little bit bored of ServiceStream back when the share price was above $1. I didn't sell at that point. I kept solid, but then I sold out when it ran up a fair bit. But the share price has just kept on running. So I'm not sure why I did sell out. But this was definitely one I was being a little bit patient because I bought on a breakout. I bought it at 80 cents. So I would have bought on a breakout back in June of 2023. And you can just see the share price going sideways with a slight upwards trend between about July of 2023 and February 2024. And I still remember being so bored during that period with this, just watching it just go up very slowly. And then all of a sudden, when they did release results in February 2024, that was the really good breakout for this company. And the share price has just continued to go up since then. So I wouldn't be concerned about this one just yet because the share price is still in an uptrend. Aussie Broadband is the frustrating one for me. Aussie Broadband is just trying. It's just trying. This is like fairly similar to the Service Stream with the share price just going slowly upwards. I think, and you can just see, yeah, there is a bit of a double top there. Just there at $4.30. I'll put the line right there as a nice little resistance area or zone. In fact, a price at $4.30. This would be a nice little breakout play or possible breakout play if it does get above 430. Best way that would happen is a nice little trading update from the company. This is the sort of situation where I'll be looking out for a trading update and a potential breakout for Aussie Broadband. Now, the other part of this particular comment from Scott, talking about how he thinks that some of these indices in America putting in the evening star and some downside is on the cards. I would say there's downside on the cards just because a lot of these indices have had a really good run based off just not as much fear when it comes to tariffs, I think. So all of this talk about tariff deals, and we haven't seen any tariff deals except one, haven't we? So where are all these tariff deals? That's a big question. But the reason we have seen a little bit of downside in the American markets overnight was because, funny enough, Dow Jones was down more than NASDAQ, which I thought would be the other way around. So Dow Jones down 1.8%, NASDAQ down 1.3%. Whole reason behind this is because of increased tensions in Middle East. And funny enough, those sort of situations when the markets do decrease, increased tensions in portions of the world, I don't get concerned about those sort of things. The only reason I might get really concerned is if we do see an escalation in tensions, we do see a full-out war, and we do see oil prices rally significantly. So that would be a concern, because if oil prices rally consistently and considerably, we will see inflation rise again, because oil prices are pretty significant when it comes to inflation. It's interesting. Dow Jones, I don't think is that strong right now. It does look like it wants to roll over. I may have said that a few times. And NASDAQ didn't quite get to its all-time high, did it? And it's pulled lower. So I need to see some all-time highs with the Dow Jones, or not the Dow Jones, the NASDAQ, before I get less concerned, although I'm still concerned. I'm still going to be concerned. I just think has been a little bit of an overreaction for the market. Sort of the buy the dip mentality has just seen the markets rally a little bit too hard. Just my opinion. And yeah, Scott also mentions don't get complacent, y'all. Gathering cash. Simon PT2000, another really interesting, some really good insight. Talking about Palladium. I don't know much about Palladium, I'll be honest with you. And Simon believes Palladium is an interesting play. It is much more expensive than gold. And although gold price has been on bull run, Palladium price has barely moved, although we did see it going on a bit of a run recently. Also, Palladium is a key component used to reduce harmful emissions from combustion engines. With the transition to EVs moving a lot slower than expected, combustion engines may be making a comeback. I'm not sure that's going to happen. I think eventually we will see electrification advancing beyond where we are now, particularly if we see oil prices rise significantly. That would be a really good motivating force for people to be buying hybrids or EVs, because if oil prices are high, it does cost a little bit less. Other than Zimplats, I can't think of any other Palladium producers. Yes, I could not tell you another Palladium producer. Also, 3 thumbs up. This is another reason why I chose this one comment, because you liked it. You liked it. 3 thumbs up. And Medical Investor says, yeah, Zimplats is seeing some good movement and volume as well. Time to get in for sure. So let's have a look at Zimplats and Palladium. And where is Palladium down here? Oh, it's down a fair bit. 3.19% on Friday's session. There you go. A nice little rally, and then it's pulled back. Now, just because we're seeing a bit of a pullback doesn't necessarily mean anything. But this sort of reminds me of what we saw back in October last year. It looked like Palladium was breaking out, and then all of a sudden, look at that, it just collapsed. So that's Palladium. And Zimplats had a really good 2-day span, 2-day period. So up, what was it, 15% on Friday, the 6th of June, and then up another 14% or 15% on Tuesday's session. And a fair bit of volatility we have seen since then. So I think with the pullback on Friday, depending on the timing of that pullback, let's have a look at the 1-minute chart for Palladium. So the pullback really started, it started on, it started after our session had finished for the day. So a little bit of selling coming in for Palladium, and that should see Zimplats share price drop a little bit on Monday's session. But Zimplats chart does look like a brilliant or potential brilliant breakout. But again, the share price of this company is going to be highly influenced by the price of Palladium and other materials, commodities. But this is the sort of thing I'm looking for. This is the sort of chart I'm looking for. Not only the share price, but look at the volume action as well. So definitely want to put on your watch list, I think. Zimplats. Sham G33. Ooh, the second comment for Sham. What's your thoughts on Doug? Well, I don't know anyone named Doug. So don't even, Doug Walters. What's my thoughts on Doug Walters? Well, he's before my time as well. I'm trying to think of anyone else famous named Doug. Doug. Oh, the TV show, yeah, but I don't know much about that. Doug Lyman, Doug Funny, Doug the Pug. Oh, really? Okay. Now back onto Doug, the company. So we'll start off with a chart. So this is one I have traded in the past. I'm trying to remember what they do. They're a service. They're a software, not software as a service. There's something as a service, but I'm trying to remember what they do as a service. What they call themselves as a service. Something management as a service, something like that. Oh, computing as a services, HPCAAS. So computing as a service, software solutions, and scientific data analysis. Yeah, so computing as a service. High HPC, I'm just going to Google that. It's something, there's something ahead of the computing. High performance computing as a service. That is right. And you can see when I Google that, the company that pops up is Doug Technology, which might mean this company is quite unique. This is one of the only services they do offer. Anyway, so I was trading Doug Technology for a while because look at that chart. Look at that chart from the start of 2023 all the way through to September of 2024. Beautiful uptrend. There was one instance where we did see a lot of selling coming in and then all of a sudden a lot of buying. That was on the release of their results in February. And I held through that. I did take profits along the way somewhere. And then I completely sold out, would be sometimes towards the end of last year. And the share price did collapse, went all the way down from 325 at a high to 88 cents at a low. Share price is looking like it's starting to rally. You'd even say and argue the share price has now moved into at least a short-term uptrend with a new higher high and a higher low. So the chart looks good, not quite a moving average crossover, but this could be the start of a new uptrend for Doug Technology. Now, I'm pretty sure the company is profitable. Let's just have a quick look. Based off the yearly profit last year, almost $100 million of revenue, $4.23 million of profit. But it looks like in the most recent half year, they had a loss, only $43 million in revenue and a $6 million loss, which probably explains why the share price did drop. I don't know or can't, that's right, that's down. I can't remember the company releasing any sort of trading update recently. Could be wrong. Business update, 1st of May. I must have already forgotten about that. So let's just have a look at this most recent business update. And let's just have a look. Revenue for the quarter was 16.5 million US dollars. EBITDA 5.3. This is all in US dollars. Nice increase in both. Operating cash flow of 3.3 million, cash 16.3 million, and 22.7 million of new services projects awarded. So this was released on the 1st of May, and that sort of aligns with a nice little rally on that day. Share price did increase 11.7%. So it looks like maybe the turnaround has started for Doug Technology. So maybe just a bad half-year period, and things are starting to turn more positive for the company. There we go, a nice little table here. Oh, that looks like revenue did drop in the third quarter. I thought it said it increased. Oh, software. Just talked about software delivering 23% revenue growth. Okay, just software. So yeah, that's interesting. So they just mentioned the good part, the good division, which was software. Revenue increased from 2.3 to 2.8 million. Yes, it was a 23% increase, but the other two services had a big drop, including HPC, which was down 32%. Yeah, they didn't mention that, of course, because I suppose that's not a highlight. That's a low light. Yes, I sort of do understand that. You want to highlight the good things happening. Really, you do want to do that. Anyway, so the chart does look interesting. I would not say or call this a high quality company just yet. I think it needs a little bit more history. In fact, way more history, probably. So if we just have a look at the quick overview of this company. Yeah, so revenue growth for the last 3 years is 24.3%. Earnings per share growth over the last 3 years is actually negative 51.8%. Gross margins, nice there at 54.8%, but they need to convert those gross margins into operating margins or operating profit, because operating margins at 5.7%. I'd like to know why you do see a significant decrease in margins from gross to operating. What are they spending their money on? Could be administration, capital expenditure, I don't know. And no return on equity or return on invested capital at 5-year average, because they've just become profitable. I'm pretty sure they've just become profitable last few years. Let's have a look. Revenue and income. So revenue and income, yeah, they've been profitable 2 years, the last 2 years. And when you have a look at the revenue, it's all over the place. In fact, there was a period of time when revenue did drop. So I would not define this company as high quality. It needs a lot of proof before I go down that route, but I would be willing to trade this one. And it is starting to the chart is starting to look a little bit more favorable right now for this company. So thank you for that, Sham G33. So JustJamesDean, on to JustJamesDean, who's calling all these end of financial year bargains. So he's mentioned MinRes, Flight Center, Redox. I've talked about all these. HCW, which is Healthco, Health something REIT, Healthco and Healthcare REIT. Healthco and Healthcare and Wellness REIT. Yes. Let's just see if the share price of this one has bounced. This one has been as share price has dropped, I think, because they do have a bit of, what do you call it when a bit of the word has just gone. The word has just gone. They do have a bit of relationship with HealthScope. But there's another word I want to use. So they do have a relationship with HealthScope, and the share price has dropped, and the chart looks horrendous. So there could be some value here, but I do think the market is pricing in a fair bit of risk, and that's why the share price is down. Now, if you're willing to take on that risk, this could be a bargain. I'll just say could at this point in time. Could be a bargain. So that's Healthco. I just wish they changed the name. Healthco, Healthcare REIT or something like that. Monash CMW. What's this one? Is this Cromwell? CMW. Cromwell. I don't know anything about Cromwell at all. Dividend yield 8.22%. Obviously, it's probably a REIT. Is it another REIT or developer? Real estate investment trusts, property investment and funds management business, sort of like a REIT. I'm going to have a look at the weekly chart for this one. I would say, even though the share price has dropped a fair bit since the highs in 2019, so the chart looks pretty horrendous, but is there value? I'll leave that up to you. NHC is New Hope Coal. Again, New Hope Coal, it could be cheap. It could be maybe not as cheap as you think just because of the price of coal. And if coal starts to rally, this company would be one of those good buys. So this is definitely another one where another company would say it's not high quality just because it's a mining company. And Domino's Pizza share price just keeps on dropping. Just keeps on dropping. No end in sight. Look at that chart. Share price has dropped from a high of $170 down to $20. And if you have a look at the daily chart, there's no end in sight. It really, the rot, this latest rot, really started when they released some sort of trading update on the 25th of Jan 2024. Share price on that day dropped 31%. And even though the share price rallied on the 7th of Feb, I can't remember why. 7th of Feb, up 21%. That was not enough to shift the sentiment. I think that was a trading update. No, it was something. Oh, that was when they decided to spend. Oh, I forget. My memory is completely deserting me. Right, discerning. My memory is completely. It's my birthday, so I'm allowed to do this. Have these little errors. I'm just going to put on price sensitive. There was a trading update. No, was that the right day though? 2nd of February. They did release a trading update on that day, but there was something else in this trading update. Maybe they were doing something in Japan. I forget. Oh, that's right. They're closing 205 loss-making stores. So the market were really excited about that. But I was thinking, it looks like a breakout, but it's not the sort of financial announcement that I do like, that they're decreasing their costs. I like to see companies saying, well, we're performing much better than expected, so our profits are going to be much higher, and we're not decreasing our costs. That's the sort of breakout I'm looking for. And really, the share price has plummeted since then. And on that day, share price reached a high of $36. Now it's $20.33. So is there value in this company just yet? Last time share price was this low was 2014. We're at a 10-year low for Domino's. There is a chance that the market is overreacting, particularly if we see a bit of a turnaround. So I think a way to play this is just wait for that turnaround. So that's Domino's, Dexus, and CSL. Dexus is another property company. I'm pretty sure this is the management. Is this the management arm of Dexus? Because there's all these other Dexus, like Dexus Convenience, Dexus Industrial, Dexus blah, blah, blah. So is this the management of all these other REITs? I could be completely wrong with that, but I'm assuming that is true. Real estate investments, leasing, and tenant services operates through the following segments: office, industrial, co-investment, property. So that's what I'm assuming. Now, this chart does not fill me with any nice fuzzy feelings. It's trading in a range between about $6.30 and $8. And if we go have a look at the weekly chart, the share price has dropped from the highs back in 2019, fairly similar than a lot of other REITs. And yeah, I don't know. I'm not the biggest fan of property, but there might be some value here. And the other one is CSL. I've mentioned this a lot, that I do think below 240 is compelling buying for CSL. And we are at that level right now, 238. Trading in a range for the last 5 years. And the more or the longer this range goes on for, the more compelling CSL becomes, because CSL is a growth company. Although, if we just have a look, where is it? So we just have a look at the growth in CSL. It might be a little bit not as strong as you might want. Now, revenue growth is above 10%, but earnings growth is below 10%. So I'd like to see more of that revenue growth translate to earnings growth. So that's my one little red flag when it comes to CSL. So probably you see maybe margins have been or decreasing the last few years. So gross margins, yeah, there we go. Gross margins have been decreasing since 2020. And I'd say operating margins have been as well. Oh, slightly, yeah, down from 30% to 26.6%. But there's a chance that we'll see margins starting to increase again. But the other thing, the most important thing here is this company does experience growth. Now, sure, the dividend yield is not that high. Dividend payout ratio is a little bit higher than what I would like. Return equity, return invested capital, nice. So the PE ratio is at the lowest it's been for a long time because share price has been going sideways for 5 years. If the company has grown, the company has grown. And we saw this with Microsoft between 2000 and 2015. The company grew during that period. Yet the share price went sideways because the company went through a period of multiple contraction. And that's happening with CSL right now. It's going through a period of multiple contraction. The market is less and less willing to pay a premium for this company. And you can see that just by looking at the PE ratio history. So we'll get rid of gross margins and gross profit. So the last time this is wrong. I think I've had this problem before with CSL. The PE ratio of CSL is not 14. It is not 14. So I've had this. I remember having this problem before. Looking at the PE ratio of this little graph. So if you actually go below, yeah, the PE ratio is not 14. I don't know why. He's got 14, but in this little company statistics, PE ratio is 27.7. Anyway, so it's been a while since we did see the PE ratio of this company this low. Not only that, the PE ratio of CSL is below that of CBA, which is mind-boggling. Mind-boggling, because CSL is by far the better company in terms of potential future growth. So CSL, I think, is looking like it's heading towards good value. If I saw the PE ratio, the real PE ratio of CSL before below 20, I probably will add to my position quite significantly as well. And that's it for Just James Dean, end of financial year bargains. Okay, StewPercy says, the government is decreasing the amount of immigration over the next 2 years. Do you think this will affect IDP education? I actually thought about this, not in regards to IDP education, probably will, but I was thinking in regards to our economy, because the only reason we've seen GDP growth over the last few years is because of immigration. We've seen GDP per capita decrease. In fact, I'm wondering if we can see this. I'm going to ask ChatGPT about this. History Australia GDP. What I should do is move my GDP per capita history over the last 10 years. Let's see what JGPT can come up with. I do know our GDP per capita has dropped over the last few years. Oh, it did rise. Annual change of 5% in 2024, but it did drop in 2023. So that was probably, in fact, I wonder if I can do it per quarter, every quarter, because there was a period of time when our per capita GDP did drop, or percentage. No, what percentage? In percentage, did drop percentage-wise. So hopefully ChatGPT can give me that, and I'm assuming this is accurate. Okay, so yeah, it dropped in 3 consecutive quarters in 2024, rose in the fourth quarter, then dropped in the most recent quarter. So if, in my opinion, a recession should be on GDP per capita, because that's the most important thing. It's like per share. So per capita is really important. So in my opinion, we did have a recession. And we came out of recession fairly weakly, and we've gone back to negative. So in my opinion, Australia did go into recession. in 2024. We even went in a recession back in 2018. So most quarters we do see per capita GDP rise, but we did see 3 quarters in a row dropping in 2024. And one of the reasons why we saw GDP growth is because of immigration. So the first thought I came when I saw this little comment is, if government does decrease immigration, we will see that could lead to GDP actually dropping if we don't see any more significant growth. And do I think it will affect IDP education? Probably. There was another question about this company. I wonder if I think I got rid of it. Oh, that's right. Ben Hutchinson, I'm pretty sure it was Ben, mentioned that, in fact, I'm going to just go like this. I'm pretty sure Ben mentioned IDP. Oh, no, IEL. Maybe it was IEL. Someone mentioned they were buying some shares. Or maybe not. Or maybe not. Now I've got to find where I was. Now I've got to find where I was. Oh, there we go. Will it affect IDP education? I think it might. I have no idea. But again, this company is heavily affected by... where is it? What is the... it's IEO, isn't it? This company is heavily affected by government regulation. It was really interesting to see Rudy Villapanpic, whatever his name is. Rudy, he was in Livewire, Rudy Livewire, and he actually did mention, because I knew he was a massive fan. He was a huge fan of IDP education, and he did mention in this little article in Livewire, the GFC nearly crushed him, literally. I think he had an accident or something. Now Rudy's hunting stocks built to last. So some companies he's in love with, maybe not that far. So he loves Telstra for some reason. ResMed, I understand. NextDC, Woolworths. Yeah, I'm not a big fan of Woolworths just because it's too defensive for me. And Aristocrat. He's talking about we all make mistakes in selling out of Pro Medicus. The mistake of selling out of Pro Medicus, I did learn the lesson. I didn't sell completely. I took some profits, but I maintained a position. He loves Technology One. I knew that. What was your worst investment, Slater and Gordon? But then he mentioned here IDP education. Also, we held on too long to a small position in IDP education. We did sell before the recent sell-off yet again, but regardless, should have sold much earlier. And I think one of the reasons why he held on that company or that position too long is because he was in love with IDP education. He just kept mentioning it over and over again. And every single time he mentioned it, I was like, really? I'm not sure about that. Not sure at all. And that's the chart for IDP education. We haven't even seen a bounce, which is concerning. When you see the share price drop like this, I always expect a bounce. And when you don't see the bounce, that is concerning. Sort of like New Farm. We haven't seen the bounce in New Farm. That's concerning as well. Okay, okay. So I have banked some. Here we go. I'm starting to bank some of your questions so I can do these standalone questions for my 2-month period away. And one of these questions, this is about quite a few. In fact, I think there's more than this. Group. Yeah, I'm pretty sure I banked this one. Yeah, there it is. So these are sort of questions I will like or do like. Simple questions that are going to be pertinent for a period of time, or maybe even a long period of time. So, for instance, Gurpreet Singh says, "Hi, Kneppy, keep up the good work. I want to ask you which website or news channel you follow for USA Financial Brief news." So this is one that could be relevant for a long period of time. So that's the sort of questions I do like and will answer. So I'm not answering now, but you have to wait for another few months before I answer that question. StewPercy also, nice little donation from StewPercy. If you'd like to donate, help out this channel, you can donate, buy me a hot chocolate. Now, I'm not requiring you to do that. It's just, an extra way to, another way to make a little bit extra money. So I did like your hot chocolate in muffin. Oh, if you're able to buy, yeah, I do like muffins. In fact, one of the foods I do like to eat when I'm going, or just before a hike, or even during a hike, is a muffin because they're light, full of calories, and that's the main thing, full of calories. So thank you, StewPercy, and I'll give you a thumbs up. Oh, a lot of comments about MonashIVF. So VB Ed sold all of his MonashIVF shares 3 weeks ago. What a relief after the new scandal. Have got out my barge pole out again. The damage is done. Company's reputation is now totally shot. Lately, I've seen MonashIVF on Perth TV. To be doing TV advertising in Perth must mean they are chasing more work. I doubt doctors are going to refer their clients to MonashIVF anymore. Higher volume. Rick Dillon says higher volumes today compared to first mistake. Perhaps fund manager got out. VBED recently took up a large stake in Monash. I wonder if they have now chickened out. Oh, Sol Pattinson's. Ayuki says, with MVF, you said the same thing a previous year, that there will not be another incident. It seems they didn't, and who knows what else mistake had happened before that might come out of the closet. Now, I believe this mistake, there's a chance that it was a customer mistake. And their motto, customer is always right. I think there is a chance that this wasn't completely on MonashIVF because it was a weird situation that the wrong embryo was put into the patient. And I'm just wondering if this was completely on Monash. Anyway, so we have seen a change in CEO and managing director. That's a good step in the right direction. And also think that this sort of scenario, usually the market does overreact, and we're seeing that sort of thing overreact, that this is going to be forgotten. We saw this with CrowdStrike. There was that massive outage. People thought, oh, that's the end of CrowdStrike. Everyone's going to go away from having them as a customer or as a client, and then everyone's forgotten about that. So I'm wondering if this is a bit of an overreaction. Althea Media says, I bought a bag of insurance will cover the mistakes. Just settled class action not long ago. Does this make 3 strikes? No, it's only the second strike. If they have a third strike, that would be it, in my opinion. If this is so weird, the recipient would have, from JustJamesDean, this is so weird, the recipient would have to get ready before the procedure. Why didn't she say anything? Yes, so patient's own embryo was incorrectly transferred to that patient, contrary to the treatment plan, which designated the transfer of an embryo of the patient's partner. I'm just wondering if there was possibly even a mix-up in communication. There was a communication mix-up. So I don't think this is nowhere near as bad as the previous one. And I still think there's a chance this was more of the customer not really communicating what they wanted. So it could be more on customer being wrong, but you're never going to say that, are you? And I think the customer just, complained about it, went, oh, you did it all wrong. It was supposed to be the other way. But they actually told Monash that, yeah, this is the way we wanted it. And Monash followed what they said they wanted, and then they changed their mind. There's a lot of possibilities here where it could have been the customer. The customer was in the wrong, but you never say that. The customer is always right. Anyway, so I did take a training position in Monash, and thankfully I'm up so far. So I will have a look to see where I might take profits in that training position. And hopefully there's no more selling. Oh, this is another one where I've banked. Would love an update on all your American holding and other international stock you own for the long term. So this is a one that is not relevant for the longer term. So what I might do with this one is I'll record this one, say late August, to be released in early September. So this is not the sort of question that should be as a guide question, because, but I think this is more of a longer question that will take me maybe 10 to 15 minutes to answer. Sensei says, what is the update on your newest house build? Did you lock in and hire a local independent building inspector yet? Okay, so I got my contract today. In fact, at 10 a.m., I received my contract 1 hour ago, 168 pages long. 168 pages long, if I remember correctly. And I went through it really quickly because I did make some changes. And I also wanted to have a look at the price, because if the price was way higher than it was supposed to be, I was like, ooh, that's a little bit higher. How long is it? 134 pages. So I saw the price. I said to myself, this is the price I was expecting. The price was just a little bit above that, but I did make some changes. And I just wanted to make sure one of the changes was in there, because originally there was no screens. I like to open my windows and my doors and have screens. And originally they didn't have any screens. I was like, I want a screen. I need a screen because I like open doors and open windows. And I don't want flies to come into the house. Anyway, so I made sure that was in there. And the other thing was the standard progress payment schedule. I just wanted to see how much I had to pay and what stages. And at this point in time, I have all the money. That's the most important thing. I have all the money, don't have to go into debt, that sort of thing. So that's good. And so I'll go through this contract through the rest of the week. And I'm really glad I got this at the start of the weekend, not like on Sunday evening. And I haven't hired any local independent building inspector yet. I'm not even sure when I should hire that independent building inspector. So that's something either you can tell me or something I'll just figure out for myself. Trade K, this could be also a question I could bank. Can you talk about how you manage your CGT on your trades? Yes, I might bank this particular question because this is a question I actually have received in the past. So I might do this as a standalone question. So thank you for that, Trey K. Chap Liquid, this is another one where I've banked some questions. In fact, quite a few questions from Chap Liquid, talking about Develop Global. But here's questions, 3 questions here. My question is, how do you find potential companies? I mainly hear them through word of mouth. So that is the sort of question that is going to be relevant for potentially quite a few years. Also, where did you learn about how to read charts? Was it a book, video, or someone? That is definitely relevant over a few years, because how I learned how to read charts is in the past. It's not going to change. And I'm always willing to talk about that. Might have even mentioned this in the past. I do have quite a few books that I've read. And another question, what does market cap mean? I can definitely answer that. And does the amount of shares on issue have any impact on married cap? So obviously there was a bit of, what do you call it? Spell check there, spell change, whatever you call it. So on market cap. So amount of shares on issue have an impact on market cap. So that's definitely the sort of question that I can answer in today, and it's going to be relevant in 3 months' time. Enjoy North America. Stay safe. Thank you. So look out for Chap Liquid. Look out for the answers to those questions in about 3 months' time. Yeah, about 3 months' time. Chap Liquid also mentioned if you could also have a look at Vysarn. I believe you did have a check 6 months ago. Just wanted to see what you think, what's been going on. So Vysarn was a company I did own, and then I decided to take profits. And share price has been sort of mixed. Yeah, it's been going sideways since then. So there's me buying at 16 cents, and then I took profits. I forget when, 40 cents. This was, when I did take profits, I decided that I want to own less smaller companies like this. I've sort of changed my opinion now. I'm more willing to own these sort of companies for the longer term. But and the reason I say these sort of companies, Vysarn is growing. It's profitable. At times it does look expensive. Other times it will look cheap. So let's just have a quick look at Vysarn, VYS. So this is, I've always talked about this company as a water company. So hydrogeological drill business in WA. Is that really true? Also operates in the test pumping and water consultancy businesses. So I always consider Vysarn to be a water stock, just like SciDev. I consider that company to be a water stock, sort of a water environmental stock. Anyway, so Vysarn, a very quick look at that overview. Really nice growth in revenue. So we're talking about a 36.7% growth in revenue over the last 10 years, 109% over the last 5 years, 29% over the last 3 years. So that's really attractive to me. That sort of revenue growth hasn't quite translated to earnings per share growth just yet, but it's starting to. Earnings per share growth over the last 3 years at 55.7%. Gross margins probably a little bit lower than what I want to see. I want to see gross margins up a little bit more, but 35.3% might be okay if they can increase those over the next 5 to 10 years. Operating margins at 12.1%. I'd like to see that increasing as well. Return on equity, 10.9%. 5-year average, 8.6% for return on invested capital. I would expect that to be a little bit higher if you have a look at the most recent year. We can do that quite easily. So, where is it? Capital efficiency, return on invested capital up to 16.9% in the last year, and return on equity up to 21.5%. So this company started to see an increase in those two metrics. Probably my only reason, and one of the reasons I did take profits in this one, was just valuation. P/E ratio was a little bit stretched to my liking, but if they continue to grow, and with the share price going sideways like it is, consolidating, I think this is a pretty good buy. I like this company, even though I don't own it. So this is one of those companies I don't own, but I don't mind it. I would probably get back in if I see the share price drop significantly. And when I say significantly, probably below 35 cents. It got very close to a buy on the 7th of April. We did see a fair bit of buying coming in that day. Anyway, so that's Vysarn, and I do like it. And I think this is just a nice little consolidation period. What do you think has been going on? The other thing I'll have a look at if they have released any announcements recently. I can't remember Vysarn releasing any announcements recently. Yeah, investor update on the 7th of March. So just after they released their results. JustJamesDean asked me a very interesting question. And there's a very easy answer to this one. Have you considered trading investment via Cayman Island company? The easy answer to this one is no. It hasn't even been raised in my mind. Trading investing via Cayman Island company. No. It's a very interesting question, and I am wondering why you answer this question. And maybe I'm missing something here, but I have not even considered doing this. Anyway, so no. So Roger says, if you're looking for video topics, I'd be interested to see reviews of some unloved stocks that might have good financial announcements over the next year. That's really hard thing to do. Unloved stocks that might have good financial statements or announcements. No idea. I don't try to forecast what company might have good financial statements, because that could be a fool's errand, because sometimes you just don't know. I prefer just to wait for the good financial statements. But your next point or comment here is the interesting one. Or some consistent, lesser known dividend payers. Now, even though I don't really look for income plays or dividend payers, that will probably change over the next 10 years. And I'm going to focus more and more on income dividend payers. So I have been thinking about developing a screener, and sort of like an income dividend screener, to look for the sort of dividend payers that I would like to own for the longer term. Now, I won't be looking for high dividend yield companies, but what I want to look for is companies that can grow their dividend consistently over the years, sort of like Zimplats, that sort of company. I don't want to own Telstra or the banks, because those companies don't increase their dividends consistently over the many years. So I am developing and will develop a screener, and more than likely what I'll develop this screener, and then I'll do a few videos and release those videos during September and October. So thank you for that, Roger Dawn, because this is something I'll be doing. The first bit, no. Oh, Ben Hutchinson mentioned Cyclopharm patent. I did see this. Patent on their main product extend 5 years to 2031 shores up their moat just as they enter US market. No way this isn't good news, but market sells off anyway, out of favor at the moment. I don't have huge faith in the company. To be honest, not Kneppy high quality for sure, which I would agree with. And the reason I would agree with that is Let's just have a look. Cyclopharm. This one popped on my radar, has popped on my radar a few times, but so the revenue growth is nice. So we're talking about 10% revenue growth. I would like that to be a little bit higher for this company at its particular stage in its life cycle. So I want to see an acceleration in revenue growth. That's one thing I want to see. Earnings per share growth, really nice over the last 3-5 years. We're talking about 25% per year or so. Gross margins nice at 65%, but operating margins negative. Return to equity and return to invested capital the last 5 years negative. So we don't have the history just yet where I would be confident classify this as high quality. So we need more proof. We need consistent financial performance before I get there. Okay, so the reason this popped up on my radar, someone did mention that there was someone, I forget who had put all their money into Cyclopharm, which I find fascinating. So they'd have to have a lot of confidence in their own ability to judge a company, but also have a lot of confidence in this company, what they're doing, and also the measure. I would never, ever get to that point because I just don't. The only way I would get to that point is if I was running the company myself. That's the only way I would put all my money into the one company, is if I was running that company myself, because who else could you have that much confidence in? Anyway, this one also popped on my radar because it looked like the share price was breaking out. This was back in January of this year. Share price on the 6th jumped up 25%. It looked really good. And then all of a sudden, the share price just dropped. And then the share price dropped on the 25th of February, 20%. So that must have been results. And the share price just keeps on dropping. In fact, the share price has reached almost a new long-term low. I'm just wondering, there could be nice little support at these levels. Nice little support. I'll get rid of that. So the share price is at the lows we saw back in April. Also the lows the company saw back in June 2022. Not quite as low as when the companies went through the COVID-19 sell-off. Share price fell to about 75 cents. Anyway, so you can see the share price of this company goes up and down, particularly the last 5 years. Before that, the share price was in a nice uptrend. So is the market overreacting right now to the downside? Just going to see if the company has released anything lately, apart from that patent change or patent update. There we go. Secures maximum US patent extension. And then we go on the 1st of April, Technagus US momentum accelerates with 1 million sales milestone. I think this is one I'm going to leave on my radar, but for those who I like this company a little bit more, who think this company has a lot of potential, now could be a good time because the share price is just above $1, which is a nice little support level for Cyclopharm. The other thing is nice volume since the start of the year. I do like that volume. There. Okay, next one. Chris says, hi, Kneppy. Would love if you could get onto a podcast app. Helps me listen while I am driving and trying to use maps. I'm not sure. I've never been sure whether this particular channel would be app or would be podcast viable. I don't know. I've never really thought taking that thought any further, apart from saying or thinking to myself, I'm not really sure this is podcast viable. If you think or would love this particular channel to be on podcast, I could do that. I could do that quite easily, I think. Sometimes I just don't know if it is podcast viable, but I could be wrong. So if there are quite a few of you who would love these videos to be on podcast form, I would do that. Yes, I would do that. Killer Name says, did you end up buying the dip on West African? No, I did not. I already own West African, and I'm willing to hold this for the long term. And yeah, it was actually a really nice dip, by the way. I do think this was a significant overreaction. The other thing to like here is look at that massive volume coming in just as the company came above the dip. So as it turned around, we saw massive volume. That's a good sign as well. So in my opinion, this was an overreaction, a significant overreaction for the market. With gold rallying now Yeah, so look at beautiful chart for West African. And don't forget, they are putting another mine into production very soon. But I did not buy on the dip. Anthony, hi Nep, thoughts on 5GG, which is Pentanet at current price. Do you see value or a shift in sentiment? Don't see a shift in sentiment. This is a weird one. I definitely see value. Okay, so Pentanet. Oh, damn it. Keep going back to ComSec because I want to. So Pentanet is an issue. I do own Pentanet shares. And I do believe sentiment is still negative with this company. But I think there's a disconnect between what's happening with the company and how the market perceives this company. And the reason I say that is the company has released two really good earnings 4Cs in a row. So let's have a look at the most recent one, where they are operating cash flow positive, free cash flow positive. Now, and they're increasing their cash receipts. Everything's moving in the right direction. And both times when the company released their pennies 4C, we saw the share price pop up. And then the selling came in. So in a way, you can see this happen. Yeah, the first time it happened, 22nd of January, share price popped up 67%. And then the selling, look at the selling. Share price pulled all the way back down to below 3 cents. The next time the company released their pennies 4C, which was on the 16th of April, share price popped up. Well, share price didn't pop up on that day, but there was a bit of a rally. And then the share price has pulled all the way back down to below 3 cents. In fact, the share price has gone to a long-term, if not all-time low at 2.5 cents. So the market just doesn't care if this company is operating cash flow positive and free cash flow positive. And I sort of understand why there's been selling coming in, because the share price has been significantly higher than in the past. So there's a lot of shareholders underwater with this one. And whenever the share price pops up, we saw this happen back in March 2024. When the share price pops up, selling comes in, all these shareholders who are underwater getting out. So even though I do see a bit of a turnaround, I do in the business, maybe not a turnaround, even though I think the company has hit that inflection point, the market doesn't see that. So there is a bit of a disconnection between the financial performance of the company and what we're seeing in the chart just yet. So even though I have taken a position in this company, I probably wouldn't be trading this right now. So this is more of a longer term position, just because the market just doesn't care right now. So definitely not a shift yet. I'd like to see a bit of more of a shift in sentiment, market sentiment when it comes to this company, but I do see value because the company is quite cheap. So $10 million market cap. Yeah, 10.83 million market cap for a company that is now cash flow positive. So it's moving in the right direction. But just because it's moving in the right direction business-wise, sometimes it can take the market to open its eyes. Open its eyes, yes. Okay, Sanka says, can you please look at MPW? There are only a few buyers and sellers, but the chart has looked good since March this year. Thank you, MPW. I have a feeling this company changed. Yeah, Metal Powder Works. This was something else. Was this a reverse takeover? Oh, I forget what happened here. I looked at this a while ago, and yeah, I'm trying to remember exactly what. Let's have a look at the most recent appendix 4C. Can't remember this one, but yeah, so this is the reason why I can't remember it. Receipt 634,000, operating cash flow negative. So nothing exciting when it comes to their cash flow just yet. But in saying all that, unfortunately, we can't look at ComSec because it's down. In saying all that, the chart looks very wild. Maybe I was going to say bullish, but I wouldn't say this is bullish. It's gone up a lot. So something happened on the 11th of March. What happened on the 11th of March? 11th of March. Oh, that's right. Powder Works commenced trading on ASX. So Eve, that by the way, that most recent appendix 4C might not be relevant because so I think in the back of my memory, I do remember having a look at this presentation. Yeah, but this is a relatively. I'm thinking this might be a reverse takeover. I'm just thinking that right now. I could be wrong, but I think this could be a reverse takeover, which means I need a little bit more time to digest how this company is performing. So I think the most recent opinions foresee for the March quarter might be not relevant. So I need a little bit more time. But the chart has really gone bananas. Markup is 163 million, but the chart looks really interesting and really good, but has the sentiment in this company, has the hype in this company just gone a little bit too hot. So I need a little bit more time with this one. And the way I look at Metal Powder Works is this is a recent IPO. And I'm just wondering if I have put this into my IPO watch list. So let me have a look. Yes, it's in my IPO watch list. So with this company, I need some more time. Either that or I need to see a profit upgrade from the company. If I do see a profit upgrade from the company and the company is profitable, I would become a little bit more interested in this company. But at a markup of 163 million and the share price rallying significantly, in fact, it's gone up almost threefold. We'll say threefold in a fairly short period of time. Is the market getting just a little bit ahead of itself? StewPercy says, "Hi, Kneppy. Are you worried about going to the States with all these riots at the moment?" No, absolutely not, because I won't be spending much time in any cities. By the way, when I fly into Los Angeles. So when I fly into Los Angeles, when I fly into Los Angeles, the airport is, where is the airport? It's here somewhere. There it is. I will be going through, by the way, I will be going through the CBD of Los Angeles, but I'm going to Pasadena. Why is it Pasadena? I forget. I thought it was somewhere here. The reason I'm going there is I want to go to an REI store. And I'm going to tell you exactly where I'll be going. Yeah, so I'll be going to this one. And I'll be staying somewhere, East Pasadena. I'll be staying somewhere here to go to the REI store so I can buy some stuff. So that's where my first night's going to be, somewhere in there. And then my second night will be way up here, somewhere on the Eastern Sierras. And then on my first hike will be, well, I could change my first hike. My first real hike is going to be right in here. City's Kisage Peak. I'll be doing a hike in here into the Kings Canyon National Park from the east. You drive into Kings Canyon Park from the west. I'll be hiking in from the east. In fact, you can actually see trails here. And yes, I'm really looking forward to this hike. Anyway, so I am not worried at all, because if you have a look at the cities I'll be going into, so USA. So I'll be flying into LA, but won't be spending much time there. And other than that, I'll be spending most of my time in small cities or small towns, not cities. I'll be well away from San Francisco, well away from Portland. I will be spending a couple of nights south of Seattle, just because there's a few hikes I want to do in that area. And the only reason I'll be spending a little bit of time there is because Seattle is right near really big mountains. I'll be driving through Vancouver, and then I might be spending one night in Western Calgary, just because Banff and Camel are really expensive, so don't want to spend a lot of money there. And then the next big city I'll be in is if you call it that, is Missoula, Montana. Spending one night there, but I would say Missoula has a population probably 100,000, if that. Population 77,000. So really, that's not that big. I doubt there's going to be many protests in there. I will even bypass Denver. So is Missoula, spending a lot of time in this sort of area where there are no big cities at all. So we're talking about Montana, Wyoming, Yellowstone, Grand Tetons, and then I'll be going to the west of Denver, Rocky Mountains National Park, a lot of hikes in the Colorado Rockies, well away from any cities. The town I was spending most of my time in, I think 3 nights, is a little town called Leadville, one of the highest elevated towns in the United States. Where is it? If I know where Mount Sneffels is, that's it. There it should be somewhere. There it is. Leadville, one of the highest elevated cities in the United States. Small city, I'd say maybe 10,000 people in this little town. Leadville, Colorado. Has an elevation of 10,000 feet and a population of 2,000 people. Well, there you go. It's a small little town. Beautiful area, though. So quite a few hikes in this area. And then after that, no big towns. I think the next big town I'll be staying in is called Moab. And I'm pretty sure Moab has a population of maybe 20,000 people. Maybe 30,000, we'll say. 5,000. Oh, I was completely wrong there. I know. Last time I was there, I have been there before. It just seemed bigger. So 5,000 people. So that's the next biggest town I'll be staying with. So you notice I am bypassing most of the cities. I don't care about cities. I will be spending a few nights in Salt Lake City just because just to the east of Salt Lake City is the Wasatch Mountains. And I want to do a few hikes there. But I have no interest in Salt Lake City itself. And then after that, staying well away from Las Vegas, bypassing that, bypassing Phoenix, and then I'll have to go back to Los Angeles. So I have no issues because I don't think any of these small towns will have any protests or anything like that. Anyway, so thank you for being concerned. Oh, another question I might bank up is VB Ed. Hi, Kneppy. Do you have any morals or ethics that prevent you from investing in certain sectors like gambling, coal mining, alcohol, weapons manufacturing, junk food retailing? And JustJamesDean says, would Kneppy invest in the Daily Planet? Yes, this is one question I might bank because this one is, unless my morals and ethics change significantly, they might, who knows. This one is going to be relevant for a long period of time. Jeremy Allen. This is an interesting question from Jeremy Allen. I'm pretty sure it's not Jeremy Allen White. I think I've done this before. I have a general question. For most household consumables, electricity, petrol, cheese, milk, pizza, there are well-known listed entities, AGL, Ampol, Bega, A2 Milk, Domino's, but there isn't anything recognizable for coffee or tea. Any ideas why? Or would it only be big US stocks? Because who manufactures coffee in Australia? It's a good question. Our market is fairly small, so you do have less diversification on the ASX compared to, say, United States. When you have a look at the United States, companies there's so many different type of companies you can buy in. For instance, there's a spice company. You can buy, what's it called? I think it starts with M. So you do have more options in America just because it's a bigger market. So I think coffee or tea, I'm just wondering who would list, what coffee or tea company would list on the ASX? I just couldn't think of any. Like chocolate. What's a chocolate company? Darrell's. Come on, Darrell's list on the ASX. Coffee in Australia. So Australia coffee manufacturers or growers. Any? Question mark. Oh, look at my writing. That's terrible. Yes, Australia does have coffee manufacturers and growers, although it's a relatively small industry compared to countries like Brazil or Colombia. Coffee growers, northern New South Wales, far north Queensland, Skyberry coffee, mountain top coffee. I would assume these are really small. Ooh. Would you like a list of exporters, retail brands, or investment opportunities in Australian coffee? Yes. Oh, he knows me. ChatGPT knows me, doesn't it? Let's see if there's any. Well, we've already gone through this. Oh, okay. Franchise opportunities. Uh, anyway, so the way I would answer this is we just have a small market. Sometimes you'll see uh, lack of opportunity, there's way less opportunities in this country or this our index than there are on the United States indices. So there's more opportunities by far, I think. So if you really want some exposure to coffee, maybe you can. Where is that? Where did I put that? Maybe you can buy into a franchise like the Coffee Club or Hudson's Coffee or Espresso Mobile Coffee or Degani. Anyway, da, da, da. Oh, Scott's had a little. Scott is having a little bit of a rant here. How does someone protest the price movement on a stock? Is there a regulator that you write to? Because I've seen some dodgy price action over and over again, and the ASX just turns a blind eye to it. It's not good enough. Her YouTube host gets scolded without hesitation for giving advice, while the very host of the entire market runs amok unimpeded. I have mentioned this before that I was caught out by CommSec for manipulating the market. And I was like so credulous about it. How could I manipulate the market? Come on. And then all these other institutions are manipulating the market and they get away with it. And that's the time, that's the moment where I wouldn't say I lost faith that about the regulator, but that's when I realized they don't care about you and me. They just don't care about you and me. They don't care about these price movements on the stock that are caused by manipulation by the big players. They don't care about that at all. So go on your rants, because I went on this rant probably over 10 years ago when I was caught out by CommSec for manipulating the market. Come on, that is a joke. And I can almost guarantee you CommSec manipulates the market all the time. Anyway, so Ben Hutchison says, Bubs, Australia making a one-year high today. There you go, breakout. Did not realize that. I've been trying to buy it for several days and it just leaves me behind. Just had to pay up in the end. So this is another one where I'll be waiting for, maybe not waiting. They have released a few really good Appendix 4Cs in the past 3, I think. They did release a really good one. The share price didn't do much. Oh, you can just see the chart there. So, I think the most recent Appendix 4C wasn't as good as what I was thinking, but they were operating cash flow positive. So there's another one where a company is operating cash flow positive. So it must have been the January one where I wasn't that enthused, and it might have been the October or September Appendix 4C when I went, ooh, hello. No, it wasn't that one. I forget. Anyway, so let's have a look at the chart for Bubs, because I was waiting for this to break out, and it looks like it has broken out. And I'm trying to remember when it must have been. Yeah, it must have been January. It must have been January where it must have been January. Oh, I got rid of that. It must have been January where it was a good quarter. So let's go back to Bubs. For some reason, I thought they had a really good quarter, then a negative quarter, then a good quarter. So let's go back to January and let's have a look. Yeah, it was this quarter, the December quarter. So they're operating cash flow positive by $4 million. And you can actually see the share price just pop up on that day. It went up about 22%, but we saw a little bit of a rally after that, but then the share price pulled back. So we've seen, in a way, maybe a delayed rally here, but this does look interesting, or way more interesting. If you actually zoom out, you can see a long period of time where the share price sort of went sideways, and the share price is starting to now go higher. With the share price at 16 cents, this is the highest the share price has been for over a year. So great call from Ben Hutchison. Yeah, it looks good. The chart looks really good. And with the company having 2 really good quarters in a row, particularly the December quarter, things could be turning around for Bubs, and the chart could be turning around as well. I'm going to leave Steve McCabe's. Would like your comments on AFG, as heard it's a good alternative to banks. I might bank that comment as well because I'm falling a little bit behind here. Pacho says, great work, Kneppy. Thanks for your Mayfair group video. They've been killing it. I have not had a look at this company for a while. Now, I do own this company, but it's in my super. And what I do with my super is I don't tend to focus as much on these companies. But I don't remember this company releasing anything recently. There was a trading update. Oh, no. That's right. Contract wins. Data center contract wins, 2 of them, I think. I think one of them definitely was. They're in the right space. New contracts again. This company's profitable. It's not that expensive. Well, maybe it's a little bit more expensive than I'm thinking. So if you go to Mayfield Group, MYG, I would say 99% of Australian investors have never heard of this company. So electrical and telecommunications infrastructure products and services in Australia. Revenue growth, fairly anemic, but I expect that to expand. Earnings per share growth, pretty good over the last 3 years. Your PE ratio is 25. Gross margins, nice. Operating margins, low. I like to see that change a little bit. And return on equity and return on invested capital, like to see that increase, but I would expect that to increase over the next few years. So wouldn't call this a high quality company just yet, but I did think when I bought some shares, it was good value, particularly because there was tailwinds behind the company. Now let's have a look at the chart for Mayfield. And I haven't looked at the chart for this company for a while, even though I do own it, because again, this is more of a long-term hold. So I've held this company for a year now. 78 cents, share price $1.10. So it's gone up nicely since I bought, and the chart looks okay. Still, you could maybe say and argue it's illiquidly traded. You can sort of see that just in the chart, but with time, if the company does perform financially, you're going to see liquidity improve. It's one of the reasons why, in fact, you've seen it with Mayfield Group since it listed. So the liquidity in this company back in 2023 was really bad. It has improved since then. You can just sort of see it just with the chart. You just see how the candlesticks here were really crappy. And when I say crappy, there's no structure. And you can see significant movements in the share price, particularly in 2022. And since then, we've seen it just looks better. It just looks better. I don't know how to describe it. It just looks better. But sometimes it looks like it is liquidity traded. So anyway, I do have time for this one. I'd just like to see some volume increasing. That would be a really good sign. That would be a sign that the fund managers, particularly small cap fund managers, have discovered this company. I'm not sure any of them have just yet. So this is a benefit of being an individual investor. You can find these companies well before the fund managers. By the way, this company has a market cap of 102 million. Has a nice dividend yield, 2.7%. So yeah, there you go. And just final comment of the day. JustJamesDean says expects the Accent Group expects the group EBIT to be between 108 to 111 million. Financial year 24 EBIT 110 million. If this year's profit is similar to last year's, what am I missing? VBEd says, I think the market for Accent got spooked when the guidance report stated that trading conditions were challenging. I predict that another big retailing group, Super Retail, will drop sharply when they also release a trading update. I sort of do agree with that. Just sometimes you'll see a share price drop just because of commentary. I always have a look at commentary. I'm looking for bullishness or bearishness. And when I did read the particular commentary in this announcement, I did get a but I did get a bearish vibe. And that's all it takes. The other thing I should mention is just because the EBIT is sort of similar than it was last year, doesn't mean that were expectations. The expectations could be that the group EBIT was expected to rise by 5 to 10%. And if that was the expectations, even though EBIT might be similar than last year's, the share price will drop. And JustJamesDean says also, trading update was similar to previous update. No idea why the market spooked. Only thing I can think of is like-for-like sales dropping instead of up earlier 6 months. That's another reason. If the market was expecting like-for-like sales to rise and it dropped, share price will drop. And the other thing I will also mention is sometimes the market will overreact to the downside. So I was thinking this could be the market overreacting. Okay, that's all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.